What's up, everyone? All right, so I'm gonna break down my recap for today's trades. It's a green day in a bear market, and I'm grateful for that. I just had a 3-day red streak, and today broke the red streak by being green. So I'm really grateful for that. I didn't make back everything I lost in the previous 3 red days, but I made back about a third or maybe 25%, which is good. You know, that's fine. And if I can have a good day tomorrow, then that kind of finishes the week. Still red probably, but just not as bad. So the bar is set kind of low for what I'm going to consider to be a successful week at this point. And a successful week would be if I can finish tomorrow just with some small profits, green and not red. So we'll see what I can do. But at the same time, red days happen, and a successful red day is a red day where you cut your losses quickly and you move on. And I think I did an okay job of that the last few days. I could have done a little bit better, but you know, I'm having a little bit of a hard time at times right now not getting stubborn and frustrated when I get into a trade and it immediately reverses. And so I've got to be careful about averaging down and being a little too aggressive when things really aren't hot. That's something that I need to get better at, and it'll help me to, you know, perform better in a bear market. So we'll talk about it quite a bit during this recap. I hope you guys enjoy it. If you do, please do me a favor and hit the thumbs up. I hope you're subscribed to the channel, and I'll see you first thing tomorrow morning live on YouTube right around 9 a.m. for the morning show. And reminder, the market's closed on Monday for Memorial Day. So we've got a long weekend, but we'll be back on Tuesday. And also a reminder, in case you didn't already know, trading is risky. My results are not typical. The typical result of most beginner traders is that they lose money. We don't track the typical result of traders in our community, so we can't make any guarantee that you're more or less likely to succeed than the average trader. So please trade cautiously and practice in a simulator before you put real money on the line. All right, I hope you enjoy the recap. All right, everyone. Well, this recap here today, Green Day recap, and you know, look at GameStop. I mean, this thing's gone from $116 to $148 here today. It's up 27%. Sometimes I feel like, I don't know, making it harder than it needs to be. I don't understand on GameStop where all the buyers are coming from in a way, because it's like, to me, I'm like, this isn't gonna go back to 500, like, or is it? Maybe it will. Maybe it will. I don't know, but it feels like, I don't know. It just, we're coming in resistance here, kind of. It just feels to me like it's overdone. Like we've had our move on it, and then it just keeps kind of popping up and then popping up and then. I mean, it sells off, but then it has these days where it just goes crazy. And I keep not trading it because I'm like, no, you know, this is, don't get into this. You look at the level 2 and you can see right now, you know, 50-cent spread, and, you know, you could jump in that and instantly be down 50 cents, $1 a share. You're taking a lot of risk on this type of stock. Look at how fast that just dropped to 43.70, 43.50. I mean, it moves fast. And it's on relatively light volume, 6.2 million shares. So it's not like you can really size in with big size. At least most of us probably can't. So I don't know. I just kind of keep missing it. The S&P 500 today also like straight up. And so this is kind of interesting. You know, I mean, setting sort of the stage for, you know, how I trade today, I guess. But overall market has been stair-stepping down, as we know. We've been in this bear market since January for the most part. And we double bottomed sort of off of this like 385 level on the S&P. And we had a low of 380. Let's see. Let me see that P&L. Member posting his P&L today and sitting at, golly, 30,000, 30, so 60, 75, almost $80,000 of profit today. That's impressive. Good for you. And you've got your 500K badge. So very good. Good job. Good job for you. You locked it up trading a large cap stock, but that's good to see. Reminder, as always, my results are not typical, and we don't track the typical result. We're happy to have people, you know, share their P&L and throw it out there. It's good to see, but just remember, there's no guarantee for success in trading. There are no guarantees. So take it slow and practice as a simulator before you put real money on the line. There's no guarantee that you'll be a successful trader if you learn from me, or that you even have a better chance of being successful versus learning on your own. So just really mind your risk. But anyways, so the S&P 500, and I think he probably did well today because the large cap trading, I mean, this is sort of how large caps are. They trade very closely to the S&P 500. So, you know, the S&P 500, of course, is an index of the 500 these 500 really large companies. So the S&P is actually, you know, you think, oh, well, this is, the S&P is dropping, so this is going to drop. Well, those are dropping, which makes the S&P drop because they're an index. So Tesla moving up a bit, Apple, let's see, Apple moving up quite nicely, Facebook, and of course these are our tech stocks that have been really volatile. But in any case, so the S&P 500, nice to see it bouncing here, and you've got this trend line which some large cap traders pointed out to me that goes way back. So kind of bouncing off that level at 385. I don't know, you know, I don't know if this is just a relief bounce or if we're actually going to get continuation for a couple days back up towards the 200 moving average, maybe into next week. But it's been a pretty rough start to the year for the overall markets, and you know, my trading has been pretty slow, as many of you guys know. So this is where, let me refresh this. We'll go over the trades in a second. I'm just, you know, kind of setting the stage. So locked up my third consecutive red day yesterday. This is the third time this year I've had a 3 consecutive day red streak. So 3 days in a row right there, 3 days in a row right there, 3 days in a row right there. And, you know, I mean, obviously that's not super fun. I mean, I kind of feel like this year has been a bit of a grind, you know, a couple steps forward, a couple steps back, couple steps forward, couple steps back. So I've got my 4 red days for the month of May, but 3 of them are clustered together. Green today by 6,500 on RDBX and SPRC, which is good. And hopefully I could be green on Friday and then green on Tuesday. Remember, the market is closed Monday for Memorial Day. But if you know, think about kind of what this market's been, it's kind of been like this. This has been me this year. There we go, and I'm down. It's been a struggle. 2 steps forward, 2 steps back. 2 steps forward, 2 steps back. And I'm having a hard time getting into the groove. So I'd like to know which one of you guys has been recording me while I'm in the gym, because I don't appreciate it. Today, I got in, I got green, and I got out. The gap scan, leading gapper, TCBP. TCBP is a cheap stock at 76 cents. So you guys know I didn't care about that. Skipped over it. I said, nope, I don't care about that. Next leading gapper, SPRC. SPRC, I traded the other day, and I want to say I lost money on it, but this morning it pops up right here, and I jumped in it as it was popping with 3,000 shares at about 330. This was on a little micro pullback. It rips up to 377. I took the profit for 1,200. I got back in at 410. It squeezes up to 450. I wasn't able to get profit over that 450 level. I ended up selling as it came back down, and then trying to do a dip trade off of the VWAP, and then it flushed. So I ended up being up 3,400 on it, gave back half, and I was actually probably up closer to 6,000 unrealized, but I wasn't able to lock up the profit. So this one, kind of a bummer, because it just came right back down. It just sold off hard. And then we had third leading gapper, YMTX, no volume on it, no trades. DLTR, this one, higher price, no trades. And then we had RDBX, which, you know, it's kind of funny because there's this headline that came out that they were being bought out. And this was the day where it actually dropped. And I guess the buyout price was lower than the trading price. And So now, and it was supposed to close the second half of 2022. And so I guess there's kind of speculation that if the stock price is high enough, maybe the deal won't go through. So now you're thinking, okay, are there institutional traders, hedge fund traders out there? They're trying to drive this price higher so that the company doesn't get bought out for the lower price. You start to think, what are the mechanics here that are pushing this higher? And I'm not really sure. It traded in kind of a funny way, but I was able to make a little bit of money on it. And we had some trades early in this area here, first pullback, second pullback, and then trades at the open and trades on this break right here. We hit a high of 869, 3 dojis in a row, reversed off that level. We weren't able to hold those highs, so kind of pulled back. It gave another attempt, but I didn't trade that. I was just like, no, I'm done. I don't want to push my luck. So, anyways, I kind of felt like today, I was down 10,000 yesterday. I was down 9,000 the day before, and I just felt like I don't really want to push it. So this is where I sit on the week before today, down, 22,000 bucks, which gives back everything I made the prior week. I was up 25,000 or so, I guess. I don't know, 13 plus 7, so 27,000. So I guess I'm still green versus the last 2 weeks. And well, now today I'm up 6,000. So when I sat down today, I actually opened up my small account over here with CMEG. This account has a balance of about $4,600 in it. I had used this earlier during my last small account challenge, and I was like, you know what? If there's nothing that looks good, I'm not even gonna touch my big account today. I'll take a couple trades in the small account. I'm down 20 grand on the week, and I don't want to snowball. I don't want to start to get down 30, 40, 50,000, and off my all-time highs. So I was kind of like, you know what? Let's just trade in the small account, and maybe I'll take 1,000 shares of something, get a couple base hits, get in, get out, and not really try to focus on making a lot of money. Because the problem is inherently today with my big account, it's hard not to be thinking about the fact that I lost 10 grand yesterday. And yet when SPRC started to open up, I was like, okay, this looks good, I'll jump in. And I trade that, like I said, for first 3,400, then gave back half. And then I got an RDBX and made some money. The most I was up today was about 7,200, 7,300. So I'm closing pretty close to my high of day, which is good. And that actually recoups about half of, a little more than half of what I lost yesterday. And so today ended up being a day where I was able to dig a little bit out of the hole. It was a good day for, digging out of the hole. I got a couple trades, made a little bit of money. But at this point, I don't have the risk tolerance to touch something like GameStop. And so I just don't want to push it. And I feel like I have to still be in this headspace of digging myself out of the hole, being a little bit more conservative. After 3 green days, you're like, okay, we obviously have to tighten stuff up a little bit. So I'm glad that I'm green on 2 out of 2 stocks I traded. And I just don't want to really push my luck. I want to just say, you know what? There you go. You just went from down 22,000 on the week to down 15, right? Or whatever, 16. Let's do it again tomorrow. Let's see if I can come in here tomorrow and have another small green day. And listen, if there's nothing tomorrow, that looks great. I'll trade in the small account. And if I make a couple $100, that's fine. If there's nothing that looks good for the small account or for my big account, then I won't even trade in it. So, this is kind of referring back to, the criteria that we've talked about of does something meet the 5 out of 5 criteria of being a stock worth trading? And, on basically all the stocks I had traded earlier this week, none of them really met that criteria. So let's talk about SPRC. And I don't remember if I traded this earlier in the week, because if I did, it actually probably did meet the criteria. The float, the price, those are right. The relative volume, 22, is right. And we had news out today. It wasn't phenomenal. And I guess I traded it on Tuesday. But I don't really remember. how I did on it. Just kind of popped up and then pulled back. Anyways, so today it was one of our leading gappers. It was pretty obvious. So that was fine. I think I had the right idea on that. And then RDBX, I had the right idea on that. Relative volume, a little lower, but high enough that I think it was okay. So, you know, today I had a couple that met the criteria. But when I first sat down this morning, before SPRC and RDBX were on the scan, I was like, you know what? I'm not trading TCBP. I'm not trading YMTX, whatever. I'm not trading these. So this might be a no trade day. If there's nothing that meets sort of the most basic criteria of being between 2 and 20 and having a float of under, you know, 15 or maybe 10 million shares, I'm not going to trade at all in the big account. I'm not going to put the big account at risk for a 4th red day in a row. But fortunately, we got something that popped up. So I'm going to do the same thing tomorrow. Tomorrow, I'm going to be very hopeful that we'll have something that's between 2 and 20, float under 10, high relative volume, news catalyst, you know, already moving higher on the gap scanner is one of the most obvious stocks. And if we have that, then I'll trade it and I'll be aggressive. And if we don't, then maybe I'll just trade in the small account. And I was even, so here's the thing I was thinking last night. I was looking at my P&L on the year, and I'm sitting at 343,000 in net profit. My gross profit is 458. Holy smokes, I've spent $115,000 on fees and commissions. And I'm only averaging a net profit of $3,700 a day. The gross profit is 4,900, 5,000, but the net is only 3,700. So I thought, geez, 3,700 bucks. You know, I'm trading a lot of shares to get that 3,700. You know, what does it look like to trade in a commission-free broker like TD Ameritrade? Obviously, probably have to trade with smaller size, but on some days when there's not a lot moving, it's free commission. So I don't know. I'm just thinking about it because I'm not averaging as much as I was in previous years, 2020 or 2021. So it feels like it might make more sense to be using, maybe there's more benefit to using a commission-free broker right now while things are slow. This year, you can see I've had a big loss of 43,000. I think this was on Sava. No, JCSE. Oh, right. But I haven't had a big winner. My biggest winner is only 22 grand. So this year, my metrics are not great. I've got a negative profit loss ratio. Average winners are 12,500. Average losers are 1,600. Sorry, 1,200. 1,600 average losers. Accuracy is only 64%. You know, it's just, I'm not doing as well as I did, you know, before. And so am I oversizing in a bear market? And I think that the answer is a little bit that I am. And part of it, I think, is I'm chasing those winners. I'm trying to chase the numbers. I'm trying to, you know, I'm jumping in, looking for that extension. I'm trying to get those big trades. And then they just keep like not happening. And so I feel like I'm, you know, about to get that next big trade. I size up. I've got 10, 15, 25,000 shares. I'm looking for that extension through, and then it reverses. And I feel like that's kind of the grind that I'm in, where things start to open up and then, you know, they just come right back down. It's kind of like this. I'm like in the groove and then I'm dead. It's like I feel like I'm like, okay, here we go. And then I'm right into the wall again, right into the wall. I'm just like, we're not getting that extension. I mean, we are occasionally, which keeps me stepping up to the plate, but then more often than not, it's not happening. And, you know, I mean, you could look at SPRC. On this one, I added for the break of 450. I was like, okay, here we go, $5 coming up next. Nope, came right back down. RDBX, added for the break of 850. I was like, okay, here we go. Came right back down. Double top, pulled back. So it's like, it's starting to open up and then coming down. Starting to open up and then coming down. And so, I mean, you know, part of me was like, okay, well, just jump in and stop adding. You're adding too much. You're sizing in too much. You are being a little too aggressive. And I think part of that is I'm trying to squeeze as much profit as I can. I'm trying to, you know, get blood out of a stone type of thing. I'm trying to get as much as I can out of this market. And so I'm trying to hit, with bigger size and just get in, get out, get in, get out. But the fact that we're not getting these big extensions is just hard. And, I know, Jorge, you've got this approach of buying off of support. And right now in this market, I don't have the confidence to be buying this like below VWAP. I'm like, it's below VWAP. I don't know. And then so I end up so it's like in a hot market, I'm more confident buying support, buying dips, because things keep getting bought up. But in this colder market, I get more nervous because we just see things pull back and then they just keep dropping. Like we saw in SPRC, it just kept going lower. And so even though people might say, well, breakouts aren't as good in a colder market, well, that's true. But at the same time, buying dips is pretty risky in a cold market as well. So like I get kind of, breakouts are kind of like the bread and butter, because like you get the break, you get in, you get out, you're done. And when you've got high volume, especially pre-market with breaking news, that's when you can do well. You can get those nice 25, 50 cent squeezes as it just continues on the breakout. But it seems like as the market opens and we get further into the day, the breakouts are kind of getting smaller. There's just not the same level of volume. There's not that same follow through. And so if you start over trading, especially later in the morning, you start just getting these false breakouts and they just get really gross. So I don't know. But I'm looking at my metrics and I'm like, okay, well, hey, at least you're making money. The market's pretty terrible. It's the worst it's been. I think they said this is the worst start to a market year in the history of the market. So it's pretty bad. And at least you're still making money. That's good. I saw someone mention that this is the best they've ever done. These last few months, and I'm like, okay, good for you, man. Like, that's awesome. Your strategy's working. That's great. I talked to a lot of traders, and I haven't heard a lot of people saying this is the best they've ever done. There's a few people that I've heard say that, but the message that I'm hearing from more traders than not is that this is a difficult market, and there's not the level of volume to take big share size. We're not getting the extensions to kind of accommodate big size for big moves. And what I'm seeing across the board, for the most part, with a few exceptions, is that this is not a year where people are setting too many records for profit. And I'm not either. So, again, that may be because more people in my circle are momentum traders. And so that's I'm hearing about that experience. Some traders who are trading large caps, maybe having a different experience than I am, but even large caps, like stocks like Tesla, the volume right now, look at the volume right now versus 2020. The volume is so much lower. And that volume is what allows you to get in and out with those big 5, 10, 20,000 share positions for quick 5, 10-point moves on a stock like that. And even GameStop, the volume right now is just so much lower than it was, although today it's certainly higher. So, but again, with trading, there's ups and downs, and there's hot markets and cold markets. And if we go back, so I had a colder year in 2019. 2018 was hot, had a really good year. Crypto hit 20,000, Bitcoin hit 20,000. Crypto markets were really hot. Small cap market was really hot. And then 2019 was colder. And I made less in 2019 than I made in 2018. It just felt like the market was cold, like someone turned off the faucet for momentum. And it was cold at the beginning of 2020, and the market dropped 30%, as many of you recall. And then we had this huge rally coming out of the low of March 2020 right here that led to this big squeeze up to January basically of 2022, although it sort of slowed down for me a bit in my profits. But anyways, and then now we're on this pullback. So I think the question on the overall market is, where are we going to base out? How long are we going to be in this bear market? Is it going to be for the whole year? It may be, and that would be fine if it is. We'll just let it be, what it is. There's nothing you can do about it anyways. The 2020 drop was pretty big. We had this drop back here at the end of 2019, which is when the year kind of slowed down for me. We had 2016, this was like a full year, 2015 to 16, where the market was basically sideways. Of course, you can go back even further to the sell-off in 2007 that then culminated at the end of 2008, 2009, and then that recovery. This was a long period where we were down and then came back up. So basically you hit a high in 2007, slow grind, and then the strong rollover with the financial crisis. And then by 2000, starting basically in 2009, things were moving back up. So, I would say, from this point, from the low back up, the rally, you don't need to be at all-time highs. If you're rallying, you're rallying. You've got strength. It's these, periods which, here lasted, about a year of this pretty strong sell-off, which was also this massive financial crisis. You go back further and you can see, of course, you had huge strength through the 90s, and then around 2000, going into 2001, you had the dot-com bubble burst, and you had this period of sell-off, which then reversed around 2003, and again, then you had that rally. So, where we're at right now, the market is certainly pulling back quite a bit. We may be in for a, long year or a multi-year pullback. It's not impossible. And so the question is, what's the best way to survive it? How to get through it? And I think on the one hand, what I'm doing is working. I'm making money. I'm just not making as much, but that's okay. And then on the other hand, can I be more efficient and can I improve on this strategy? And that's kind of what I've been talking about. And so being willing to look for opportunities as they present themselves, whether it's on large caps or mid caps, or you're looking at shorting or things like that. I think that that's fine. I don't think there's anything wrong with that. The thing that I am a little bit concerned about is that whatever strategy you focus on, you need liquidity, you need volume, and relative volume preferably. And so today, when I first sat down, I was like, okay, well, I can look at relative volume and focus on the relative volume leaders, and I can look at total volume and look at the total volume leaders and see within there, is that painting a different picture than just looking at percentage gapper? And it did a little bit. Obviously RDBX has pretty high total volume today. NVIDIA is the only one that's higher. Macy's was pretty high, and I was like, okay, Macy's, that's obviously a mid-cap type of stock. Would I be interested in trading it? And I just sort of looked at it and I was like, no, I don't think so. So RDBX there, that's good to see. You finally got that break at that level. To be honest, this isn't a place where I would have been super comfortable trading. You did have this break over this is like an inverted head and shoulders pattern over 843. The problem is at this time of day, on lighter volume, you've got higher risk of running into walls and having false breakouts. But, I'm certainly glad to see it opening up. Is it going to continue? I don't know. The last two times it came up, we had topping tails and it reversed here and here. You do have room on the daily chart up to 11, but I think it would be a little overly optimistic to expect a really clean move out of it. So, in a cold market, some people would say, well, just keep trading, just keep looking for opportunities. You've got to scrape together as much as you can. And I sort of disagree with that. I sort of feel like less is more in a colder market. Get in, get out quick, and don't overstay your welcome because you don't want to get burned. So like today for me, I don't feel like I have a lot of risk tolerance to take a risk on a stock that's already shown me how choppy and how much it can false break. False break, topping tail. How can I trust buying that stock? And we know how fast these can reverse. So, it's easy in hindsight to say, well, you did the right thing by sitting on the sidelines. This has moved up and I didn't trade it, and that is what it is. But then the question is right here, would I or should I be a buyer? You've already got this 10-second micro pullback here, and you've got a second one forming here, which is possibly the beginning of a 1-minute setup. It's below $9, which is whole dollar. And, right now, I don't feel like I can take the risk. So sometimes that's the way it is. I feel that way a little bit on the mid cap and large cap side too, that the ones that I saw today, I didn't feel like the risk reward was there. You know, RDBX is up 30% right now. This is a pretty, this is a pretty substantial gain. It's, let's see, the 5th leading percentage gainer in the market today. You've got a couple others that are higher, but this one's got no volume. This one's got no volume. So APYX and SPRC are the only two that are higher. And I trade SPRC, and APYX, I didn't trade. I sort of missed the boat on it. It started to open up, and I was like, I don't know about it. The volume's kind of light, but it went up anyway. So I missed it, and I didn't chase it. But the fact that I'm green on 2 out of the 5 leading gainers in the market, I think that this is the right place to be looking. You know, I know Gabe is up today $90,000 on a firm, you know, trading with really large positions and catching, you know, a big move. It's up 13% today. So, you know, again, I mean, it's from 23 to 26, that's $3 a share, and he was buying 30,000 share positions. So, you know, it's a serious trade, $750,000 trade. That's some big money, and the reward is certainly there for him. But I just don't know. I just don't know about that for me. I don't know. I'm not sure that I see for me where I would have really wanted to buy this. The 1 minute doesn't seem super clean. You've got a 5-minute opening range breakout right in here, and a little bit of a pullback right in here and right in here. So you did get some opportunities there. But these types of stocks trade very closely to the overall market, right? So then you kind of are, the reason to trade Tesla instead of the S&P is because for every dollar the S&P moves, Tesla moves probably $5. It's just got, it's got that multiple. So you can, on a 1-point move on the S&P, you can get more on Tesla, which is why some people would be more inclined to trade it. And I get that. But that's where people are using individual large cap stock as kind of a, I don't know what you'd call it, but as a almost a derivative of trading the market. They're just choosing to trade that individual stock, which is fine. I mean, you could certainly do that, but you just have to be aware that you're trading the overall market, generally speaking, because that stock is going to be so closely tied to the overall market. And what we know about trying to trade the overall market is trying to do quick breakout trades, you know, $half-dollar, whole-dollar scalps and things like that. Those are not easy, or they don't have good risk reward on the S&P. They just don't. You get so many false breakouts. They pop, they break, they flush. You've got to be in for a bigger move, and that's obviously a totally different strategy than those kind of quick day trades. RDBX, that pullback ending up getting bought up as it goes a little bit higher, up to 16. I would love to see a stock really open up, you know, and go from 8 to 10 to 12 to 15 to 20. That's kind of what I'm waiting for, you know, and the day we get it, I want to make sure I capitalize on it. But one of the challenges is right here, you could get in this thinking maybe it's going to, and you're trying to anticipate it. And then of course, by the time the move's over, you've missed it. So where can you get in where it's like, okay, this looks like it's going to really do something special and go crazy? Is this the place to start getting ready? And how much does it have to go to really be showing us that it's got that potential? And I'm not really sure, but I think this year I've done too much of trying to anticipate that that's going to happen, and then it doesn't. So I don't think that I'm as dialed in as I could be, but you know, hey, I'm up 6,500. It's a green day in a bear market, and I'm grateful for that. Sitting now at, let's see, 45,000, I think, on the month. I think after yesterday, I was up only 40, but 41,500. So we'll be at 46, 47 tomorrow. That's not bad. That's not bad at all. I mean, heck, that's, you know, that's really not bad. And this is my second worst month of the year. So I really feel like I can't complain. I guess I just am, like thinking like you can do better. And I've done better. But this is the best I've ever done in a bear market. So I've done better in a bull market, but it's not a bull market right now. It's a bear market. This is the best I've ever done trading in a bear market. So I think that, I could have one day where we have a stock that goes crazy, has super high relative volume, goes up, 200, 300%. And on that day, I could probably make enough to cover my whole month. I could have one day where I make 30 or 40,000. And the days in between, I just have to be really cautious trying to hit these base hits. But the challenge with trying to just hit base hits is that next thing you know, you're down 12 grand. You're down 10,000, 9,000. And you realize, geez, none of these stocks were really, why did I take that much risk? So, and then on the other hand, you could just spend 2 weeks in a row sitting on the sidelines, not trading at all. And if you'd been willing to just break the ice, you probably could have made, a couple $100, maybe a couple $1,000. Are you really not willing to trade anything unless it has home run potential? Because in a cold market, that means a lot of sitting on the sidelines. I'm not sure the answer, because the problem is once you break the ice, you go red on a B quality setup, you've broken the ice. Now it's super easy to justify trade 3, trade 4, trade 5, and next thing you know, you've got 5 losers in a row. And you're looking back thinking, why did I even get up this morning? Why did I even take one trade? Nothing was great. That was stupid. I should have just sat on the sidelines. But then you sit on the sidelines and you watch something that's kind of only a B quality setup squeeze up 15, 20%, and you miss the whole thing, and you're like, geez, maybe I should have been willing just to take a stab at it. So, the fun thing about trading is it is this puzzle, and it's kind of a mental game. It keeps you sharp, it keeps you thinking, you're problem solving, and you're always trying to do a little bit better. And the good news is everyone that makes it through this market, survival, survive to thrive, you're proving that you've got staying power, that you've got resilience, and hopefully if you're producing some degree of profit, I mean, that's phenomenal. That's a great sign. I know it's a hard time in some ways, because you're thinking, wow, this is really cold and we're not seeing the same level of moves that we saw a year ago, but that's everyone's in the same boat there. Like I said, with the exception of some traders with certain strategies that maybe do particularly well in a bearish market, but I'm not sure that even for traders that focus onto the short side, I'm not hearing that they're crushing it, because we're not seeing the level of volatility that you need to really size up big either way, whether you're long or short. So anyways, I don't know. That's it for me. It's about 11 o'clock. So going to shut it down. $6,500 digs me out, about 30% or whatever, 25% of what I lost this week. So softens the blow a little bit for this week, and we still have tomorrow. So we'll hope that we get some nice opportunities tomorrow and can finish the week with one more green day, and then we're going into a long weekend, right? So market's closed on Monday, but we'll be back on Tuesday. So thank you guys, and make sure you join Jess at 11 a.m. for the Warrior Pro Mentor session. You can bring questions over there, and he'll walk you through what he traded today and what he had on his watch list. Okay, I'll see you guys later. I hope you really enjoyed that video, and make sure you hit the thumbs up and subscribe to the channel if you haven't already. Our goal is to hit 1 million subscribers this year, but we won't get there without your help. So please, please, please hit that subscribe button.